continuing our Your Money a Month. Canadians, many of them searching for safer tools to protect investments in the current economic environment. Now, in some ways, segregated funds, which are offered by the life insurance industry, do offer some protection. We are joined by Danielle Genier, founder of Genier Financial Services. Danielle, thanks very much for coming on the show. Just remind us what seg funds are briefly, if you would.
Thank you for having me. Segregated funds are almost like a mutual fund, but like you said, the word insurance companies, that's the insurance company version of a mutual fund. But it comes with certain features that are not available in a mutual fund.
Give us one or two of the advantages here, please.
Actually, there's three main ones that are advantage or differences. Is one of them, it bypasses probate if you name a beneficiary. And bypass the probate is it bypasses needing of the will, needing lawyers. It's paid directly to named beneficiaries. The second one is an enhanced creditor protection, again, if you name preferred beneficiaries. And that's very advantageous to business owners who put everything at risk, but don't put your investments at risk. And then the other one is capital guarantee. It'll offer there's different options that you can pick, but one of the options is to be able to pick 100% capital guarantee of the money that you put in upon death. So regardless of the market conditions, if, a 9/11 happened and you were to pass away, a month after September 11th, obviously the markets were down, it would have guaranteed your capital that you put into it. They pay out the capital guarantee or market value, whichever one is higher.
That is very interesting. You get back the capital you put in. I guess you would forego the market gains. Now, this is a little complex because they're often wrapped up in an insurance policy of one kind or another, aren't they?
I'm going to correct just what your comment that you made. It's not you forego the increase. That if you were to pass away and the investment would be under your capital, is they guarantee the minimum payout of your capital.
Okay, I think I see that. Yeah. Now, these things do get wrapped up, though, frequently in an insurance contract, don't they?
It is an insurance contract because you have named beneficiaries. So it is, right, like I said, the mutual fund version under the segregated funds. That's how it's called.
I know we can't get into all the complexities of tax, but does it, if I'm named as a beneficiary here, does it come to me tax-free? It
all depends, again, what product it is. That is no different than a mutual fund. If it's an RSP and it's to children, of course, the estate's going to pay tax on the RSP. If it's a TFSA, it goes to your successor or to a beneficiary tax-free, obviously non-registered money as well. The only difference between the mutual funds and that is that it bypasses the probate. But the taxation is the same thing on the payout upon death.
When you say bypass the probate, it's just faster. It doesn't have to go through that bureaucratic process, you mean?
Absolutely. Is that, unfortunately, as I deal with it almost on a weekly basis, is that a person passes away who's in a segregated fund, family contacts us. If there's 3 children, within a matter of usually 5 to 7 days, is one of the insurance companies that I use often is Canada Life, and they're very quick on paying out death claims. But at the end of the day, within 7 days, we've issued and deposited into the 3 named beneficiaries the proceeds in their bank account. Very, very simple.
That's interesting. And probate can take a long time, though, otherwise?
Oh, definitely. And probate, you need a lawyer. You need a lawyer to be able to do, right, attached to the will, all the assets that have to pass probate, has to go to probate court. Depending upon where you are, I've heard things that it's taken, down south 6 months to go through probate. So, and there again, it gets stuck in the probate court. So that's one of the major differences as well.
One disadvantage can be higher fees with these seg funds?
That's what the, I guess you want to say, delusion out there. But it all depends what series that you're in, is that many times there's not much differences. It all depends what options that you pick in a contract.
On the guarantee, Correct.
Because you can pick 75, 100%, of death benefit guarantee. Of course, the 100% death benefit guarantee is going to require a little bit more management fees, but in comparison to mutual funds, there is not as much difference as what people think.
Do you think the life insurance company needs to do a better job of educating people on what it offers and the advantages?
Absolutely, but not necessarily the insurance companies, but it's also the advisor. Is that I'm indifferent to which product that the clients pick, but at the end of the day, as a financial advisor, which product is best suited for the client? In some situations, it's mutual funds. Other situations, it's seg fund. But it's as an advisor, we have to explain to our clients the differences and make recommendations upon our obligations or our profession of what is best for the client, but at least inform the client of both products.